Good morning. This is Rich Checkan, your host of Getting Rich, and welcome to episode 13. Today's Wednesday, February 10th. We've got a lot to talk about in terms of price action over the past week. As you recall, last week we had the, if you will, failed attempt by the subreddit Wall Street Bets to go after the silver market. It spurned some investor interest in that market, and afterward, from Wednesday into Thursday, we saw gold correct in the short term. It went back below $1,800 an ounce, and that caused a bunch of inquiries from clients and friends, etc., saying, what's going on? Silver's below 1,800. Is this the beginning of the end? Nothing could be further from the truth. As I told the clients and friends last week, what's much more important is not where gold ended up on Thursday, but where it ends up on Friday. Because that's where the traders are saying, okay, do I want to be long or short going into the weekend? Clearly, they wanted to be long gold, long silver, long platinum. As a result, gold bounced off of $1,800 an ounce, basically got down to about $1,780, $1,790, and it popped back up above $1,800 with a vengeance on Friday, and that carried through into this week. Puts the pricing for the different metals. Gold is back up to $1,840 and change, up about $4 from this time last week, about 0.2%, basically unchanged. Silver is up about 38 cents, so it's trading at $27.34. That's a 1.5 nearly percent increase from last week. Platinum was your big mover. It went from $1,098 last week to $1,225. That's $127 or 11.5%. And palladium went from $23.22 up about $90 to $24.12 here this morning, about almost a 4% increase in palladium. The move in the metals, again, not surprising. $1,800 is a key technical level for gold. The other metals tend to follow gold, right? So when gold tested and bounced hard off of 1,800 again, just like it did back in November of last year, it just kind of reaffirmed that we're consolidating. You will test the lows, but the strength is in the precious metals market, especially with all the debt, the impending stimulus, the dilution of the dollar, the weakness of the dollar. This trend is in place, and it will be for some time, in my opinion. The impact of the increased demand at the lower prices last week basically accentuated the supply squeeze that was already underway because of surging demand in early January and the surge in the COVID crisis that basically has caused mints to cut down on staffing, to go to shift work, and basically reduce production at a time when demand was already soaring. The result of all of that is a supply squeeze. We continue to see it being very difficult to get bullion bars and coins of all shapes and sizes. Basically, the fractionals in gold aren't even being minted right now. They're concentrating on the major seller, which is the 1 ounce coin. But we are seeing premiums move up. Premiums on gold eagles are up about 2-3% from where they were about the end of last year. For silver eagles, for instance, are up probably nearly 30% premiums right now. So we're seeing that supply squeeze in terms of the increased premiums from the mints and the wholesalers. On top of that, you're seeing extended delivery times. So just last week, we were telling folks that we don't know when it's coming. It's an unknown delay, or 3 to 4 weeks at a bare minimum, when orders usually get out the door within 2 to 3. So all of that is having an impact on the market. Clients are still buying at those elevated premiums and delivery times, but what you need to know is you don't have to put up with that. There are other ways to get your metal without an increase in premium, with immediate delivery. All you have to do is give us a call, and we'll tell you how to get that done. So whenever there's a supply squeeze, you don't have to worry. There's a way around it, and we have the answer. Just give us a call. We'll work through those options with you. So a lot of movement in the metals. The trend is established. We are moving higher. So basically, no worries, folks. You have a bull market in place, and you should be taking advantage of it. If not now, when? That's all I've got for you today. I just want you to remember to go ahead to like us immediately below this video, subscribe to the YouTube channel, leave your comments and your questions in the field below, and just above that comments questions field in the description paragraph, be sure to follow us on all the social media channels and subscribe to our free newsletters and alerts. And don't ever forget that getting rich starts with keeping what's yours.